All right, we will talk about Dr. Steve Myron with Steve Forbes, Forbes Media Chair and Editor-in-Chief, and Mohamad El-Erian, Chief Economic Advisor at Allianz, former PIMCO CEO, and former Chair of President Obama's Global Development Council. Thank you, gentlemen, very much. Mohamad, I'll start with you. By the way, welcome to the set of Kudlow. What do you think of Mr. Myron?
I think he's a solid economist. I think he's going to bring to the Fed something that's desperately needed, which is a wider range of views. The institution is very chair-centric. So whatever approach the chair takes, the committee tends to take as well. In this case, it has been data dependency, lack of strategic vision, and when you are too data dependent, you're late. So I think it's important to bring someone from the outside to introduce another perspective into the conversation.
The groupthink, hold that, that's exactly right. The groupthink that has characterized the Fed for so many years, if I'm not mistaken, you had two dissents at the last meeting, Waller and Mickey Bowman, but that was the first time in over 30 years, something like that. I think Mohamad is shaking his head. So that's a long time. So I call it groupthink. Now, groupthink may have ended at the last meeting, but without question, Steve Myron is not going to be part of Jay Powell's groupthink. What will he be part of?
I think he's going to be asking the questions the Fed does not want to ask. That's why, by the way, they've so vigorously opposed Judy Shelton a couple of years ago. Not that one vote was going to make a difference, but she'd ask those embarrassing questions about what models you use, why do you do this, why do you do that? And they don't like that. It's become very, very insular. And that's why I think Myron going over there, the fact that he's going to, as Mohamad said, he's going to bring a perspective, even if they don't like it. They need outside questioning. They need, let's call it fresh air, in terms of what they see ahead. And the fact that they still believe, and we've discussed this before, that prosperity causes inflation is preposterous. You know, bad monetary policy is what causes monetary inflation.
It's interesting, Mohamad. Myron has not been bashful about his views. One of them is about the dollar. Now, I'm reading that he wants a cheap dollar, a low dollar. I'm not so sure that's really the case, because what he said on our show and elsewhere is actually lower trade deficits will boost the value of the dollar. Now, you may not agree with that, and I will appreciate it if you don't agree. But basically, he's saying lower trade deficits from the tariffs and other factors would mean pushing out fewer dollars, and scarcity would bring the dollar's value higher. We haven't seen that until recently. I guess the last few weeks, the dollar's done better. Up to that, it dropped about 9 or 10%. What do you read him on as far as the dollar goes?
So I think he understands that the value of the dollar is a reflection of other things. The deficit is one thing, but most importantly is how attractive is the U.S. to foreign investment. And this is really important. We are right now at the forefront of transformational innovations. We are leading the world in those innovations, and they can, if we diffuse them properly, Larry, through the economy, and we're not talking about that enough. We're talking about the innovation, but not the diffusion. But if we get the diffusion right, they can fundamentally change our growth trajectory by enhancing productivity in a way that we have not seen for many, many years.
So, Steve, how does that square? After all, part of Mr. Trump's trade strategy, opening markets without question, leveling the playing field. But part of his strategy is getting more direct investment, private direct investment. I'm not going to play the 4 buckets quote from Howard Lutnick, Commerce Secretary, but it's a great quote. Direct private investment and also governmental investment for economic growth and national security. In other words, Trump is saying, come on here, bring your money here. In fact, build your factories here. You won't have to worry about tariffs. Now, I don't know. It sounds, at least on the surface, that would be very bullish for the U.S. dollar.
Well, and that's why I think they've got to get these contradictions out of the way. If you're going to have, as you know, a lot of foreign investment coming in, that's not going to cure the trade deficit.
Yeah, that's right.
And also, though, in terms of I wish they'd put a stop to any chatter about a weak dollar, thinking that's the way you would deal with it.
Who's chattering now? Who are you fingering? Be honest.
No, I'm not going to name names, but they refuse to formally say.
Do you think the boss wants, do you think Mr. Trump wants a weaker dollar?
I think he gets seduced from time to time.
He has a flirtation with it.
Yes.
Then he pulls back.
And then he pulls
says
back.
we want to be the reserve currency.
But they got to be firm about it, because if he and the Federal Reserve then said, we want a stable dollar, I think you'd see the dollar go up in value for the right reasons, and you'd be able to do more interest rate cuts.
Mohamad, as I mentioned at the top, using Shakespeare as our foil, the idea of tariffing gold is off the table. I mean, I talked to people in the Treasury Department. They're going to put out an executive order. The market was worried about that. Gold prices went up for scarce, I guess, by $50, but then it came back down. You don't want tariff the gold price. I don't know, how important is gold in your model?
So I think gold is identifying something that we should worry about, which is that too many people are looking to slightly diversify away from the dollar. The euro is not attractive.
Right.
No other currency can replace the dollar. But what we've seen, and that's why you've seen the gold go from record to record, Larry, is that it is attracting more and more investment. And it's very unusual to have the NASDAQ at a record level and have gold flirting with a record level. NASDAQ is risk on, gold is risk off. So it's very important to keep an eye on gold because it's telling you something about diversification away from the dollar.
Last 25 years, by the by, gold's the best performing asset. And you know what's second? Silver. Now, I'm going to take Bitcoin out for a moment, the calculation, but gold and silver have both outperformed stocks. Stocks have done pretty well, but gold and silver have outperformed. So every time I do that stat, maybe we'll talk about it on the radio tomorrow. So I'll just have to say it again, all that glisters is not gold. Often you have heard that told. Many a man his life hath sold, but my outside to behold, gilded tombs do worms enfold. Had you been as wise as bold, young in limbs and judgment old, your answer had not been enscrolled. Fare you well, your suit to Portia is cold. Steve Forbes and Mohamad El-Erian, and many thanks to Bill Shakespeare for helping us out. Coming up on